Michael Batnick. Welcome.
Mr. Fahmy.
Thanks for being here.
I love you.
Thanks for being here. I appreciate you being here. Joe's Happy Hour. I do have to give a quick introduction. Director of Research at Ritholtz Wealth Management. You are a superstar of 3 podcasts. Animal Spirits, co-host that one, and Compound and Friends.
Yeah.
And what are your thoughts?
That's
live podcast.
Yeah, that's right.
And you're a world-renowned author as well. So everything, Long Island renowned. Is that close enough?
I'm in my Merrick library. That's good enough for me.
All right, that's good. I love let's start with your story. Or is there anything else in the introduction you want to cover? Or is that pretty much cover it?
No, that's it. You know, I'm not director of research anymore. You've been away a long time. Maybe you didn't hear.
Oh, I thought that was so I already screwed up.
That's a Goodfellas reference. You watch it.
Yeah.
Managing partner. Thank you.
Congrats.
Thank you. Yeah.
Congrats.
I gave myself a promotion.
You promoted yourself? Yeah. Okay. So awesome. I love your story of how you met Josh and how you got the job on the train and all that. Can you tell that story?
I can tell that story.
I love that story.
Yeah, thank you. It is a good one. All right. How much time we have?
We got plenty. There's no time limit.
Right. I'll give the full version. All right. So I didn't. There's my phone.
That's okay. This is not live.
Joe, you know how like people that have done okay say I was never motivated by money.
Yeah.
And you're like, motherfucker, you went to Harvard. Like, what are you talking about? Like, you did all of the paths to very much get to where you. Okay. I really didn't. It's not that I wasn't motivated by money, because that's ridiculous. I just never thought about it. It was not something that I grew up around. I did not have a father who worked on Wall Street or, that just wasn't in my family's genetics. So I fucked around a lot growing up. Like, grades were always not a problem for me because it was, high school wasn't that difficult. So I grew up.
I'm no idiot. I've been at this high school for 7.5 years.
Yeah. So I did well enough in high school, despite not doing my homework and just being a jackass, and did well enough in my SATs to get into the University of Indiana, the business school as an undergrad, which at the time was like borderline top 10, maybe top 15 business school. And I said, see, I'm smart. I could, not so stupid. And then I got there, looked around, and I said, I don't think I belong here. All of these kids were serious, right? Like, I didn't go to any of my classes. I lived in Indiana for a year, and I studied bong hits. That's what I did. I didn't go to school at all. I didn't even take the tests. So I got kicked out after my first year, and that was embarrassing. But you know what happens? I was a young, immature
18, 19,
kid.
It happens.
I stayed home, went to Nassau Community College, and Indiana gave me a second chance. They said, come on back.
We missed the bong hits.
Yeah, we could use some more bong hits. And I dropped calculus because I was not doing well. I remember coming back, and my roommate from freshman year, I was living with again in junior year, and he goes, you learned nothing, huh? Like, nothing's changed. I'm like, shut up, Brian. Don't worry about it. So anyway, Brian was right, much to my chagrin, and I dropped calculus. I was on academic probation. That was like part of the terms. So they kicked me out again, and that part of it was tough because the second time I felt like I really let my dad down. Like, he had my back, and I will never forget like sitting in the car in front of my house, just like crying, humiliated, and then I graduated from Queens College, the renowned Queens College, and in 2008, when I graduated, the only place that I can get a job was at Mass Mutual. And
what were you doing there?
I was selling life insurance.
Okay.
Or at least that was the idea. And the agency that I was at happened to be either number 1 or number 2 in terms of production, is what they called it, in the entire country. And so I was surrounded by real swinging Ds.
Yeah.
Like people that wore suits and made money and wore watches.
And motivated.
And I was looking around and said, see, I knew I would be okay. No big deal. And then I found out what it was, right? Like selling insurance is a really, really shitty way to make a living. I don't think anybody goes to college or aspires to be a life insurance salesman. No offense to people who sell life insurance.
Right,
it's something that, you back into, or let's just say that the world is not your oyster, right? And some people are better at it than others. So it was 2008, and immediately, or maybe not immediately, let's say after 2 months, I was like, oh, fuck.
You're hating it.
I'm like, this is why people pay attention in school, you idiot. You fucking idiot. This is why you should have paid attention. So while I was home for the 2.5 years after I got kicked out until I graduated, I was working full-time as a waiter at a decent Italian restaurant. I was the only white guy there.
So you left, this is after Mass Mutual or while you're still there? I lost track, sorry.
I'm sorry. I'm giving context.
Have the edibles kicked in yet?
I'm giving context. I'm sorry. I'm delirious. Listen, in my defense, I was up at 5 o'clock. I missed my flight. I'm in rough mental shape, but I'm back.
I get it. No, you're doing great. You're doing great.
So while I was at home, studying at Queens College, I'm working full-time as a waiter.
Okay.
And so I was able to save up, I think probably like $30,000 or $40,000. So I felt rich, right? As like a 21-year-old.
Yeah.
Like I felt rich.
It's a lot of money.
And all of that over the next couple of years went to zero because I had no income and I was paying rent to work at Mass Mutual. I was paying $400 a month to work at Mass Mutual. And I was making $0 in commissions because I wasn't a very good cold caller, and it's 2008. You know what I mean?
So it's supposed to be kind of like a draw, and you're supposed to be making.
Yes, but there's no draw. There was no draw.
But you're not making anything.
Zero draw. So I quickly become disillusioned. People are just like lying. Like, hi, this is my pitch. I'm so embarrassed, but this is. I'll pick up the phone. Hello? Hi, this is Michael Batnick from XYZ. Does the name ring a bell? What the name ring a bell? No, what? Who are you? Oh, I thought it would because I do a lot of work with your colleagues. Yeah? What sort of work? Well, I help them with their financial planning. Wait, which Mike? Who are you? I'm going to be in the building next Thursday. Does this, and click, and that was the job. And
over and over and over.
Over and over and over. And that was after I had called my family, which was just a horrendous.
Your family didn't even want to do business with you?
Dude, it was such a horrendous experience. So I called my family first before I knew, during the stages of like learning and thinking that like this is the way you're supposed to do it, and thinking that I was actually selling a viable product. And the final straw, I mean, there's many final straws, but I remember sitting in my uncle's house and I'm pitching him insurance for his grandchild because this is what they told you to do. And again, I just start crying. I'm just like embarrassed and humiliated and lost and had nowhere to go. And so during this time, I'm meeting people and I'm trying to figure out what the hell I want to do. And I don't know what I want to do. I know that like I like the market, but just getting back to the point about me like never being motivated by money. I spent a lot of my day job talking about the risks of individual stocks and how hard it is picking individual stocks and giving data on most stocks are not worth owning, right? Most stocks do not beat the index over long periods of time. 40% of stocks fail to beat treasuries, you know what I mean? 95% of all stocks fail to beat the index. Like it's just a waste of your time. Well, I was a huge beneficiary of a single stock. My parents got divorced when I was 6 years old. And my mother, who had no college education, had to go back to work. And so she did. And in 1996, her brother, an accountant, put $15,000 in the stock for her in 1996. And that stock was Celgene.
Yeah, I remember you told me the story, yeah.
And so her investment in Celgene literally went to $1 million. And so I knew the story of Celgene because it changed my mother's life and in my life, right? My mother was making $20,000 a year. Like it put food on the table. It allowed her to pay the mortgage. It allowed her to buy a car. It really, really fundamentally changed my life.
If you nail one of those big stock winners,
and stuck with it.
And stick with it, it can change your life, yeah. It's very rare, though.
And so I asked her for my 18th birthday to buy me options in Celgene. And the money doubled, tripled, whatever. I rolled it and went to zero. But I don't know what the fuck is wrong with me that seeing the light of what the market can do for you didn't send me on like a course straight for Wall Street.
You're young. I mean, you don't know.
I was
a lot
young.
of people don't know what they want. You know, you're supposed to know right out of college what you want.
But so
some people are 50 and they don't know what they want.
Thank you, Joe. This is helpful for my own sanity, because I look back, I'm like, why didn't that do something for me? Send me like in a direction. And whatever, I was immature. I don't know what the answer is. I was immature. So anyway, again, just getting back to that, I was never driven by money, because had I had that, I would have beelined for Wall Street, right? So
I would have went to work at Celgene and gotten involved in the employee stock purchase plan. That's what I would have done.
So
anyway,
I'm lost at Mass Mutual, and it's 2009, and I'm going into the office. I have no manager. I'm floating. Who is this? Not everybody. Nobody knew who I was, but I really was just by myself. And my father introduced me to a patient of his. And this person was an advisor, a broker. And he took a liking to me. And this person changed my life. He didn't know it at the time, but he changed my life. Because he started sending me Breakfast with Dave Rosenberg. Do you remember that? You remember Dave Rosenberg, the economist? So
I've heard the name, but I don't remember what this.
So I don't know what bank Dave was at. RBC, I can't remember. And he was sending me Breakfast with Dave, and it meant nothing to me. It was Greek, right? It was 2008. He's talking about the pigs, and I have no idea what he's talking about. And then Ed Yardeni and a bunch of other sell-side stuff. And I rediscover, I'm like, oh yeah, Celgene market. And I start to fall in love with the market as the market's in free fall. And I met one person who's like, my wife was babysitting for this person. And he's like, yeah. So yeah, I had a drink with him. And he said, you just, do the CFA exam and get a job at a hedge fund. And I was like, that's a good idea. I'll do that. Thank you, sir. So I started studying for the CFA, and eventually, I think December 2010 was when I finally left the insurance company. I had not sold a single policy. I didn't believe in selling whole life to people that didn't need it. But so I stopped even pretending. I just was going there because I had nothing else to do.
Before you can continue, I'm going to forget this to ask this question. You're painting the picture of unmotivated, no direction. I don't know what I want to do, to literally running a top RIA in the country, running one of the top financial blogs, top podcasts, well known in the financial tech community, all financial. What changed?
I'll tell you.
Okay, all right. Because
I'll get there.
I'm like, it's not that I'm not getting your earlier story. I'm
giving you a lot of details.
No, that's
what we're here to talk about.
Yeah, no. So go ahead, please.
So one of the reasons why I was never necessarily concerned, right? I keep saying I wasn't driven by money. I was never concerned. It's my personality, right? I was born with a brother and a sister, biological brother and sister, grew up in the same house as me.
Yeah.
We're very different people. It's my personality. I'm not a warrior, for better and mostly for worse. I always I always had an irrational amount of inner confidence that I was going to be okay.
Yeah.
But I don't have that external confidence. I'm not the type of person to walk into a room and impress anybody. That I don't have. And so I struggled to demonstrate to the world that I was worth taking a chance on. And so I was just desperate for anybody to take a chance on me.
Okay.
Dude, I applied to the Bahamian Central Bank. This is how desperate I was.
Wow.
I applied for a job as an internal wholesaler in fucking San Antonio. And for those of you who were saying, well, what's with the F and why are you emphasizing that? An internal wholesaler is the person on the phone in a call center. They could be anywhere. They support the external wholesaler of, say, a mutual fund who's on the road traveling.
Yeah.
The internal person is at the desk. Why San Antonio? They were hiring. And had my mother not been ill, I potentially would have got up and moved to San Antonio. And so I was at a very dark point in my life. The money that I had saved was going to zero. My eyelid was twitching for 9 months. I couldn't sleep. I was depressed and anxious. It was not a great point in my life. And my mom was dying, which made it a lot much better.
There's a lot going on.
There was a lot going on
going on here.
So I was really and truly lost, like just lost without direction. And I didn't have any, listen, it was 2010, okay? Or like nobody was getting a job on Wall Street.
No.
And I didn't know anybody on Wall Street. I didn't even know what Wall Street meant. So I'm learning about it. And I had a meeting with one time with a guy who said, do you want to be on the buy side or the sell side? And I said, yes, any side. So I'm flailing. There's a bunch of close calls. Here's a funny example. You ever see, there's a guy, Tim Urban, who writes a blog called Wait But Why, and he's got this visual, and it's a tree with a million different branches, and it says, you are here. And there's a million different branches behind you of paths that your life could have taken to get you to where you are. I'll tell a quick story, and there's several others, but I'll spare all of the details. In 2010, I got hired at E-Trade. The manager was willing to take a chance on me.
Because you look like the E-Trade baby?
And I cried. I said, finally, somebody threw me a life raft. It was $65,000 or $70,000, which, you know, might as well have been $1 million.
Might as well have been $1 million, yeah, at that point.
You know, at this point, I think, my mother was still alive, I believe. And it was...
What were you doing there? Or what were you hired
so
to do?
I would have taken over. It was called a financial consultant. They basically, there's a book of $400 million, and these people don't want to talk to you, right? Like they're at E-Trade, they're self-directed because they don't want to talk to you. But their job is to call them, upsell them if you can,
See
get
if
them
they
to a
need
managed
any,
account,
yeah.
whatever.
Okay, yeah, I get it.
So I'm like, I made it. Okay. While they're doing the credit check, something pops up in my credit report. Now, while I was a waiter all of those years and saving money, I also was paying rent in Indiana because my sophomore year when I got kicked out, I had signed a lease with my roommates because I didn't know I was getting kicked out. So freshman year, I signed a lease for the next year. So I owed $400 a month or $350 a month. So I was working full time because there's no way my parents were paying for that, nor should they have, right?
Yeah.
So I was paying rent. Little did I know that somebody damaged the apartment and didn't end up paying it, and there was a credit claim or a credit report on my file.
It ended up on your...
And
you didn't know about it.
And thank God it ended up on my file, because that delay in between the time that they were looking into they were doing an investigation into my credit history, the manager that hired me left. The new manager wouldn't take a call from me. So at this point, I am crushed. Just crushed.
It's like what did you? It's like you had like a double murder on your record. Or
anyway,
something.
Funny story about that is that a couple years later.
Funny thing is, I did have a double murder.
No,
on my
I did.
record.
A couple years later, I see an email from this guy at Goldman Sachs. I'm like, that name looks familiar. Turns out that years later, he became my external wholesaler at Goldman Sachs. And I'm like, hey, dude, do you remember me? You hired me at E-Trade, and then you left Goldman and you really fucked me. You know what?
Yeah.
So anyway, he still works at Goldman, and funny how that worked
Full
out.
circle, yeah.
So anyhow, okay, so I had my last potential job, and this was not a potential job. It was to work in like the financial department at one of the major airlines. And I'm at game 3 at the Garden of the Knicks Heat game, 2011. And I'm a diehard Knicks fan, lifelong. Like
I can tell from the sweatshirt. Yeah.
My first and second love were the Knicks. And as I'm sitting down at the game, I get an email from this guy. Hey, sorry, I can't help you. And at this point, I am really, Joe, I am toast. I have no options.
The E-Trade thing's not working out.
No,
there's nothing else.
That was already done. There's nothing. I got nothing. So I'm like, and at this point, I had spent I had spent 2 years going to the library every day, in love, obsessed with the market, studying for the CFA. Like I found what I wanted to do, what I actually wanted to do, in terms of role. I guess I wanted to be an analyst. Who's going to hire me, right? I was 26 at this point. A Queens College graduate. Like, who's hiring me? And I'm thinking to myself, like, all right, it's not going to happen. Like, go get a job at Verizon or Starbucks.
Back to waiting.
Go be a waiter, and Figure it out. And so I'm at the Knicks game, and I remember like it was yesterday, one of those like flashbulb moments in your life. I sat down and I told my friend, and I was bummed, to say the least, because I was just lost. I don't know what I'm going to do with my life. And the Knicks are getting destroyed. Thank you, LeBron and Wade, and thank you, Carmelo, for not being as good as they were. And Mario Chalmers, who I owe a lot to for hitting a corner three, putting the Knicks down 21 points, end of the third, and I get up and I said to my friend, I got to go home. He's like, what? When's the last time we've been in the playoffs? Where are you going? I'm like, I got to get out of here. And I'm on the train, and I'm scrolling through Twitter on my BlackBerry, and as I pull into my hometown of Merrick, my phone dies. And had my phone not died, Joe, and had Mario Chalmers not hit that shot, and had that credit report on my file not happened, I never would have met Josh. So I'm reading Josh's Twitter storm. Actually, before Twitter threads, it was called the Twitter storm.
Tweet storms, yeah, I remember those, yeah.
So Josh was tweeting about how old he feels because I can never remember if it was Kurt Cobain's daughter or Eminem's daughter was turning 18. And Josh is tweeting about it. And as I get into our train station, my phone dies. And if my phone didn't die, I would have been like this as I walked past Josh. So Josh passes me. And at this point, Josh Brown is my guy.
You're on the train or on like in the station?
We pull into Merrick,
yeah.
And I put my phone in my pocket because it died, and I walked past him. It's 10:50 on a Friday night.
Oh, okay.
What are the odds that Josh is on the same train as me?
Yeah, and the timing.
And that Mario Chalmers hit that shot.
Chalmers hits the shot, phone dies, you run into Josh.
Get that email before the game. If I didn't get that email, I would have stayed.
So you're kind of in a bad mood because you're not.
Right.
You have no. Okay. Okay.
So for context, for those of you who might not be familiar with Josh and I grew up in the same town. Josh was writing a blog called The Reform Broker, and Josh grew up in the brokerage industry. And there was the exact same incentives that I saw at the insurance company. Different product, same people, same incentives, just selling shit to people that don't need it, don't want it. By the way, people need life insurance, but 27-year-olds don't need whole life insurance. Okay. So
you run into him.
So I latch on to Josh. He's tweeting.
You say something to him?
He's the funniest guy in the world. He's my guy.
But did you approach him at the train station?
So I walked past him.
Yeah.
And again, another one of those light bulb moments, or flash moments, whatever they're called. And I stopped and I said, turn around. So I turned around and I tackled him, metaphorically.
Yeah.
And this is 2011. So this is like when Josh was, I guess, on the ascent. He was probably doing some hits on CNBC by that point. In fact, I know he was. And I introduced myself. He was nice enough, drunk enough to give me 15 minutes. And a couple of months later, when I saw he tweeted that he and Barry were hiring, shot my shot, got the meeting, and got the job.
Wow. The amazing sequence of events is mind-blowing.
It's mind-blowing.
Because when you told me the story, you didn't tell me all these details the first time.
And there's more, but that's enough.
Yeah. We've already lost the audience. It's okay.
That's enough. So the interview with Josh went great because I think what I had was a lot to offer. Candidly, because I interview young people now and I want to see what I had.
Yeah.
Which is ambition, desperation, determination.
It's ADD right there.
Is that what it is?
The acronym's ADD, yeah. Ambition,
ADD,
determination, yeah.
I did have
desperation, yeah, and ADD.
Enthusiasm.
Yeah.
And I wasn't full of shit. I didn't pretend to know more than I did. Now, I had been obsessed with the market to that point, like living and breathing it. Well, not living it, breathing it. And I just demonstrated that I will do whatever you need me to do to get this job. And I didn't bullshit him. I didn't try to impress him with what I know. Like, I know what I know, and I know I don't know a lot, but I will do whatever needs to be done. And so it was the three of us. There was a sales assistant there, and that's how it began. And
Barry was there too.
Barry was there too. And the two of them, they saved my life. And if it wasn't for that chance encounter, who knows where?
But it's not only the sequence of events. Is like, you had the balls to go up and say, so because I've run into so many people, I'm like, I'm not going to bother them. So the sequence of events is one thing, but to actually go up to them and introduce yourself, that's
So the meeting was complete chance, right? Of course, that is called luck.
Yeah.
The part that I deserve a little bit of credit for is I went up to him.
Going up to him, yeah.
I was prepared for my opportunity when it happened, and I took advantage of it. And I could say it's been 12 years that we've been together. I think I've paid it back. I think I've done a lot for Josh and Barry too. But they saved my life, and I owe them everything. That's
awesome. It's an amazing story there's a lot of lessons there too. But so now I'm like, while you're telling the story, I'm picturing a stock making a bottom.
So all right,
and now you've bottomed, and now you're on the way up.
So I was with somebody. One of our mutual friends in Coronado at Howard's Stocktoberfest a couple of months ago. And he said, how did you do this? And he's like, I don't, like, no offense. Like, literally, like, how did you, because I remember you back in, like, 2017, like, in the early days. And how did you go from, like, that kid to this?
That's what I asked earlier.
Yeah.
Because now, I get the sense you go up to him and you're like this raw kid who's like, look, I'm not claiming to be some PhD or some, amazing like market wizard, but I'm willing to learn. I'm willing to do whatever it takes. And you start blogging, the podcasting, researching, because not to knock Josh because he's brilliant, but a lot of the stuff he's doing on TV is you providing and helping with the research and the bullet points.
Yeah, not anymore. I did that for a long time. I handed that off. All right, so how did I do this?
Yeah.
All right, so allow myself to give myself a little bit of credit. I worked my fucking ass off, and I'll elaborate. So again, no education, right? Zero. And I had every opportunity in the world. Like my parents gave me every opportunity to make something of myself, and I didn't, and that's on me. But so when I was studying for the level 2 of the CFA exam, I had to have been one of a handful of people with zero industry experience who's sitting for that test. So I gave up 2 years of my life, more. Every single weekend, every single night, I was completely determined to get that credential, to prove it to myself, to prove it to Josh and Barry, to take a chance on me. Nothing was going to stop me. I am extremely competitive, although you wouldn't believe it by my education. I didn't care about that. But when I have a goal, I go after something very, very hard. And so I was very determined, and I saw the opportunity that we had. I saw where this was going. Did I know I was going to turn into, so it started with 4 of us, me, Josh, Chris, and Barry. 4 of us, $50 or $60 million in client assets. Now there's almost 70 of us, and we're over $5 billion.
Wow.
Did I see that was going to happen? Maybe not to this extent, but I was very bullish on us. I would have bet my life on it. I did bet my life on it. So I was relentless. I still am relentless. I was in the office last Saturday. Like I don't stop. And I think at this point, one of the things that drives me is I am responsible for a lot of people's livelihoods, not just myself. But we are responsible. I have 66 employees. They have kids, they have families. They've all joined because of the promise that we made to them. And I am not going to relent.
That's awesome. And you said something I'm drawing a blank now. I love the drive. And when you did this now because that's the word, the consistency is amazing. Because I think that's how you define excellence. I think I heard that somewhere. It was like a podcast or something. They asked someone, how do you define excellence? And he said one word, consistency.
So I started my podcast with Ben in 2017, November. We were the first ones in our firm to do. Well, Barry had his. That's not true. But inside RWM, because Barry's is on Bloomberg. Inside RWM, Ben and I started in November 2017.
Yeah.
So it's 7
and you've
years
done
later.
one once a week, over almost 400 episodes now?
twice. And in the pandemic, we were doing 3. Guess how many episodes we've missed? 1.
Oh, it's not a once a week podcast.
We do 2.
Oh, you do too?
We do too.
The one with him is twice a week?
Yeah.
Okay.
So the one that I do with Ben is a stand animal spread. So we do a sponsor one called Talk Your Book, where somebody comes on and they talk your book.
Okay. Yeah.
So
yeah.
I've missed 1 episode.
Wow.
And so I had this. So we have semi-annual partners meetings, the 4 of us, and we talk about ideas, objectives, things that didn't go well. What do we need to improve on? And we never talk about dollar milestones. We never talk about we're gonna get to 5 billion and then we're gonna get to 10 billion. Like we don't speak that way. It's always, again, I'm not a long-term thinker. Considering my career, my educational career, I could, you could take that to the bank. I think about today and tomorrow. But I do remember there was one time in probably 2017, 2018, where I very naively remember saying, you know what? Let's get to $3 billion and let's shut it down. Let's get rid of the clients who might not be the greatest fits, and let's all be making enough money and enjoying ourselves. And in hindsight, it sounds incredibly naive and dumb, and it was. I didn't know at the time. What I didn't appreciate was we couldn't just get to $3 billion with the 17 people or however many people we were at the time. It was going to require a massive investment in people. And once you are responsible for that many people, you owe it to them.
Yeah, there is no shutting it down.
There's no slowing down.
Yeah, it just continues to grow.
Because people are motivated by growth, and not just for the sake of dollars, although that is the ultimate output, for lack of a better word. We're motivated by growth. And it's not just about making more money. It's about, I want more tomorrow than I have today. We all want that. It doesn't matter if you're Jeff Bezos or Joe Fahmy, right? We all want more tomorrow than we had today. And so that's something that I missed. And so at this point, we've gone too far. There's no slowing down. So I'm not going to give you that, okay, 10 billion is the next, like it's all coming. Like all of those numbers, they're all coming. We're inevitable.
Yeah, the consistency though, not just with the podcast, with your blogging, because before the podcast, you were you were consistently blogging irrelevantinvestor.com.
So that I don't do that much of anymore.
Right. But you were consistently doing that. And I think that content is content. Yeah. It's just different forms. Some is tweeting, some is written, some is audio, video, whatever. So you've replaced that with the podcast, or at least past, but the consistency of putting out content is very admirable. It's amazing that you've been able to do that.
Thank you. Well,
I've done less than 10 episodes and I'm still struggling with this.
I guess I love the sound of my own voice. What can I tell you?
Well, it's, so you're blogging and you're doing the, podcasts and doing multiple podcasts, and you're still running, helping run an RA.
Yeah.
Yeah. That's, it's an incredible story. It's very admirable, because going back to how you went from unmotivated, still brilliant, but maybe just not sparked by it. My guess is the answer, how you went from this to being a machine doing what you're doing.
It's the same thing.
My guess is that phrase, you become like the 5 closest people you surround yourself with. So I think not the only thing, but part of it is being in a group of like-minded people.
I have incredible partners, you're right. But I think part of what held me back as a student, I was talking to my dad about this the other day. He said, we didn't know what to do with you, meaning him and my mother. They didn't know how to get me to take school more seriously. It's not like they were not absentee parents. This came up because my dad brought me a box of my old report cards and my old, and we were laughing, and lacks discipline, needs more attention, not fulfilling his abilities, like all this stuff. And I said to my dad, like, there's nothing that you could have done. If anything, if you had pushed harder, I would have just rebelled harder.
Yeah.
I didn't give a shit about school because it came relatively easy. And I didn't care. If I got a 98 on a test or a 70, it made no difference to me. And part of what held me back was my spilkas, my ADD. I can't thrive in that setting. And if I were to do it again, sort of even knowing what I know now, I think I still would have extreme difficulty. I don't work that way. But when you see me on a train, when everybody else is sleeping, I don't stop. I was just on an airplane for 6 hours and I was working the entire time. So I was able to harness all of my deficiencies as a child, and my day is chaos. If you were to look over my shoulder, you're like, what is this maniac? What are you doing? And of course there's pluses and minuses to that, but my partners, of course, that plays a huge role in terms of motivating each other.
Sounds like it's organized chaos, though.
It is.
So you've channeled a lot of that into something you're passionate about. Because there's a story of this kid who was young and they claimed he had ADD, but he was a big surfer. And when we talk about surfing, he was so excited and he was so like every detail. And then we're like, you don't have ADD. This is, that was something he was passionate about.
Yeah. I don't know. Cause
we all have versions of ADD.
Somebody sent me a book. I don't know who sent this to me. On the off chance that you're listening, thank you. What was it called? Like How to Love Your ADD, or I forget the title, but I'm reading the book and I was almost brought to tears because it just reminded me of sort of the crippling challenges that I faced. And there was one part like, have you ever put your keys in the fridge? And I'm like, holy shit. And it just, we didn't know these things growing up. You know what I mean?
Yeah.
Like, it's just not something that we spoke a lot about. But there was a point you made earlier that I was going to say, but I forgot. Now I'm rambling.
No, I was just talking about the kid who was into surfing, and you've channeled a lot of your you've channeled a lot of your energy.
So I love this. I love what we do. I love the people that work with me. I love the clients that we serve. I love the market. And I was thinking as I was getting ready on the airplane for my shows on both Tomorrow Animal Spirits and What Are Your Thoughts, I'm fired up. Like I can't wait to do it. I love to do this. And I am blessed beyond belief that I get to do what I love with the people that I love, because my life could have gone very, very, very differently.
Can we switch over to talk markets?
Please, let's do it. Enough about me.
No, because so it's funny because part of this podcast is I am friends with and meet so many interesting people that I told you I don't want this to only be financial, but so far, because my audience is financial, all they want to hear about is the markets. And I do it like 2-3 times a week anyways. So, but when I have financial guests, we probably should talk markets.
Let's do it. Before we do that, I just want to say that I don't remember the first time you and I met. I'm sure it was with Josh and JC.
Yeah.
I don't remember the exact first time, but you are one of a very small handful of people, my favorite people that I've met in this industry.
Thank you.
Like there's a lot of acquaintances, but you are a true friend, and I'm so happy to do this with you.
No, I appreciate you doing this. This is awesome. And thank you for that. That's very kind. I'm sorry if it's a broad question, but I'm going to get into one of the things with what's your outlook for 2025?
Okay.
And because there's a reason I'm asking this, but I want to hear this, or I can tell you the reason, but go ahead.
All right. So let's back up.
I don't need a 19-page macro strategy.
You're not going to get one.
Okay.
I feel a great sense of vindication. So when I was blogging a lot, I was writing a lot about, now again, I don't know, I had imposter syndrome, as everybody should. If you don't have imposter syndrome at the beginning, you're a sociopath, right? And so I felt like I had the firepower to back me up between like Josh and Barry and other people in the blogosphere. But I definitely was a little bit nervous about hitting send on some of the ideas that I had. I had been writing a lot about the CAPE ratio back in, I guess when I first started writing about it, 2015, 2016. And when I first started writing about the CAPE ratio, now the CAPE ratio, for those of you who are like, what is a CAPE ratio? It's the cyclically adjusted price to earnings ratio. So it's your standard price to earnings ratio for the market, but instead of looking back over 12 months, it looks back over 10 years of earnings to smooth it out and adjust for inflation to determine where you are in the cycle. You high, you low, you right in between. And the CAPE ratio had been high, and high for quite a while. And so initially, I was of the mind, which I think was reasonable at the time, don't do anything crazy with your portfolio. Don't go to cash. I am I am very much a stocks for the long run type of mentality. I think they're, not necessarily picking individual stocks, but stocks go up over time. And there's a lot of reasons for that. And so with the CAPE ratio, initially I was like, listen, don't go to cash. I'm not saying go to cash like Henry Blodgett did and said the market's going to crash because the CAPE ratio is high. I hated that. I rebelled against it. Never believed that. But what I did say was lower your expectations, okay? If the CAPE ratio is high and you think you're going to get 8 to 9% in the stock market over the long term, maybe take it down to like 6 or 7, 5 or 6 mentally. So that if you don't get them, don't try and time the market, but just lower your expectations. I thought lowering your expectations was a way better strategy than trying to figure out when to be in, when to be out. For the average person. I'm not talking about professional traders.
Right, for the average person.
For the average person.
I agree 100%.
And when I'm talking to my audience, I'm not talking to you, Joe. I'm not talking to traders or professionals. I'm trying to help people who are trying to get educated about the market, okay? And then over time, as the CAPE ratio stayed elevated, I said, hey, you know what? Maybe there's good reasons why the CAPE ratio is as high as it's been. Maybe there's a reason why the CAPE ratio, if you take the average, so now we're looking at the average from 1926 to today, right? We have this whole big sample set. How relevant is the 1930 stock market to today's market? How relevant to the 1950s? And what if instead of looking at the CAPE ratio over time, you look at the average through time? So so let's say that you're in 1940 and you had this data, which you didn't. But let's say you had this data in 1940. So, okay, so what's the average between 1928 and 1940? And then what's the average from 1928 to 1950? And you plot it over time with each passing year. And if you did that, what you saw was the CAPE ratio was rising very consistently since the 1980s. And that if you're talking about, well, the CAPE ratio is above average, motherfucker, the CAPE ratio has only been below average at one moment in time over the last 25 years. Do you know when? In 2009. And do you know how long it stayed there? 2 seconds.
Yeah. So
the CAPE ratio had been higher than the historical average 90% of the time, 96% of the time for the past 20 years. So now at the time you had all these really intelligent academics, dude, people that work for Chicago and Dartmouth and Yale. Who the fuck am I to be talking over their heads? And in 2018, Research Affiliates, who is a company that manages tens, perhaps hundreds of billions of dollars, wrote an article called Cape Fear. And they quoted me, Joe. And they quoted me as a Cape skeptic. Now, you can imagine the ego stroke that was for me at the time. Holy shit, I'm being taken seriously by these luminaries of the industry, Rob Arnott, who I respected and still have tremendous respect for. Rob Arnott is quoting me as a Cape skeptic. I was both flattered and I was nervous. And one of the quote was, I said that the game is different. You're comparing Oscar Robertson to Russell Westbrook. It's the same game, but the players are completely different. And one of the reasons why I gave for the Cape being elevated was the Mag 7. It is different this time. And I was so afraid to say it. It was different. It is different. It wasn't, it is, okay? And so you asked me where I'm at 2025. And I give that story not just to pat myself in the back, although it does feel good. Dave Rosenberg, another economist who I have tremendous respect for, and I'll tell that story on my Animal Spirits podcast tomorrow of where that respect comes from. Dave Rosenberg sort of capitulated. Dave Rosenberg is an economist who was bearish in 2008 when I started reading him and has been bearish the entire time. Vocally, very bearish. And Dave Rosenberg recently said, not a mea culpa, not an I'm sorry, but yeah, maybe it's different this time. And so where do I stand on 2025? There's a lot of people thinking the same thing, Joe. In 2023, when everybody was bearish going into it, the NASDAQ bottom on December 31st, 2022.
Yeah.
Everybody was bearish in 2022. I was on a podcast with Josh, our friends Dan, Nathan, Guy, and Danny Moses at the NASDAQ in October. Show of hands, who thinks a recession is coming? Every hand went up. Show of hands, who thinks that was a bottom? No hands went up. Okay. So we know what happened in 2023. And listen, nobody could have predicted ChatGPT and the launch in November, myself included. Nobody could have predicted that. And I do think that absent that, I think 23 would have gone significantly differently. We'll never know, but that's my opinion. So we had a 20% rally in 2023, give or take. And as we wrap up 2024, we're up almost 30% on the year. Not a bad 2-year period. Where does that put us for 2025? Are we going to have another 30% year? Seems unlikely. Am I bearish? Am I saying sell all your stocks? That's not my style. I will never say that. But again, I would probably caution people to maybe lower your expectations a little bit. And if I'm wrong, and that's not opinion. If I'm wrong and we're up 30%, I'm not going to apologize. That's fucking awesome.
That's a great problem to have.
You know what I mean?
It's funny. I wanted you to say this, and without telling you, the reason I asked is coming into 2023, Wall Street strategists, those 15 to 20, Goldman, Morgan, Credit Suisse, they all have at the end of the year, a year-end target for the next year. For the first time in over 30 years, at the end of 2022, their forecast for 23 for the first time in over 30 years was negative. The average, to your point about the average consensus for the next year, I always say this: if the market does 8% a year roughly, depending on the stats you look at, when you're giving your prediction, go 6 to 10.
And they do.
And that's what they do
every year.
And you can't lose your job. It's a brainless thing, and no one's going to look at it. By the time the year gets going, they raise it lower. No one really cares. Right. But you have to do it as a piece of research or whatever. So at the end of 2022, recency bias. We're in a bear market, and no one is thinking anything positive. And for the first time in over 30 years, the consensus opinion for 2023 was negative.
Those dumb bastards.
I know. So then we have a 20-something, 24% year in 2023. At the end of 2023, the S&P is about 4,800.
They still weren't bullish.
The consensus for 2024 was 4,800.
Yep.
It was literally like 20 points off from where the market closed.
Yep. Even the biggest bull, Ed Yardeni, credit to him. Even he wasn't bullish enough, it turns out. His price target was 15% short of where we ended up. Nobody was bullish coming into 24.
So coming into 2023, negative. Coming into 2024, flat. And you have back-to-back 20+% years. Here's the problem now.
Yep.
Recency bias. You just had 2 amazing years. And again, I'm like you. I'm not turning bearish. I'm just saying after 2 monster years, now let's say we're roughly 6,000. Now they're not coming up with 64 to 6,600, which is your 8 to 10%, whatever.
7,000
Some
plus.
are. It's 7,000 plus.
Yep.
And I love what you just said about expectations being realistic. I think, again, now the wind at your back of recency bias is letting everyone say, oh, what can go wrong and everything's going to be amazing. I think people's expectations, curb your...
And I'll add on to that, Joe. I don't want the market to go up 30% this year. That's not healthy. That sets us up for a potential really bad outcome. I don't get to determine where the market goes, right? But if I could play God for a second, I would love a sideways year. I would love a down 3%, up 6%. I don't think another up 30% year would be healthy in the long run.
If it does, so if you use the analogy, 95 to 2000 was a new invention with the internet, and we had a whole bunch of amazing years. When that move was done, we had a 3-year, roughly, March of 2000 to March of 03, whatever, roughly a 36-month bear market. So if you use the analogy that now the new invention is AI, and we do have in 2025 another 20-something% year, and now you have a stretch of 3-4 amazing years. When all the growth slows down,
it's not good. I don't want the market.
We're going to have a prolonged bear market.
Yeah, I don't want.
I'd rather have a flat year.
Yeah, no, you shouldn't want the market trading at 28 times trailing.
But I want my stocks to go up every single day. I don't like this. Yeah. That's what people say because we're entitled to. People feel like, what do you mean? What do you mean NVIDIA and Microsoft and Apple and all these stocks aren't going to go up forever? Amazing companies, but when you study history, I'm just a little bit passionate about this because now I feel like, and I hope I'm wrong, but I feel like everyone's projections for 2025 are way too optimistic.
Yeah. Now, how about this? I don't apologize. I don't hope I'm wrong. I want everybody to make money in the stock market over the long run. I don't want the market going up 30% next year. I don't think that would be good. Unless, okay, here's a caveat. If earnings support another 30% rise in the stock market, I'll take it. All right?
Okay.
Big caveat. If it's not driven by a ridiculous multiple expansion, if it's earnings driving the rally higher, great. If all of this investment into these data centers and these GPUs, if that turns out into margin expansion,
productivity margin,
and
all that
S&P
good stuff.
earning $285, phenomenal. I'll take that all day. What I'm talking about is where the hype runs away from itself. When the multiple goes from the earnings multiple goes from 25 times trailing up to 33, and we don't get the earnings growth, that's going to be dangerous. Okay, so with that caveat out of the way,
that's fair. That's fair, and that could happen because of, no pun intended, animal spirits or just the chase. Like the chase where people underperform for a couple of years and they feel they have to get involved. And there's a lot of psychology, as we know.
It's all psychology. You know,
it's all psychology. Yeah. It's all psychology. But I would love a single-digit year with a 10 to 15% correction. And when people say, "Oh, that's ridiculous," again,
wait, who says that's ridiculous?
No, because look. We live in the most impatient world ever, where the younger generation, like everyone wants everything yesterday. They want to make money every single day. They don't want stocks to ever go down. When we have normal pullbacks, I deal with a lot of people. When we have normal pullbacks, people freak out.
You have a select type of clientele.
That's true.
And credit to you, I'm sure you've delivered excellent returns, and you, due to your superior stock selection, and I say that seriously, I've said this to multiple people, you're a professional. I would give you my money, right? Even though I don't think the average person has any business trading individual stocks, I believe you. I would believe you with my own money.
Yeah.
I'm sure you've done very well, and your people have been accustomed to a certain type of experience that you've delivered to them.
Yeah.
But I think the average investor,
correct. Two different things. I agree with you. Yeah.
The average investor who is, let's just say, investing in their 401k every 2 weeks would probably welcome the opportunity to buy at lower prices with the retirement money that they're not going to touch for 2 decades. At least they should.
I agree. And again, I think I'm not knocking. I love my clients, and I know you do as well with yours. I think it's just two different mentalities. Some people are okay. They're very risk averse. They're okay with 6 to 8% because if I can get, for the longest time you get 0 in the bank. Now you can get 3 to 5 depending on what vehicle. So now people are like, hey, I'd be thrilled with 6 to 8%, and they've always been thrilled with that. Other people are looking for higher returns, superior performance, but that also comes with risk. I just think in general, I've just seen. We talked about this on Compound and Friends. Sentiment moves very, very quickly.
Does. The market fucks with people, Joe. You can't have great returns without drawdowns. Now, wherever those drawdowns are, that's up for you to determine your own risk tolerance. But you cannot have one without the other. If you think you can, well, you're going to find that real soon. And that's not a market call. You will find out eventually.
Yeah, that
does not exist. But I had a handyman in my house the other day because I'm incapable of hanging up a picture for him. And he saw me looking at charts, and he's like, "Oh, you're in markets?" I said, "Yeah." He said, "Let me ask you a question. What would you do with $50,000?" I'm like, "Well, give me more. Like, what are you trying to do with that money? What's it for? How much risk are you looking to take?" He's like income, like nothing too crazy. So I'm like, okay. So I'm like, you see this chart? Here's a 10-year. This is the risk-free rate from the government for 10 years. It's giving you 4.2%. So anything that has income that's over that has risk. Different types of risk. Liquidity risk, price risk, income risk, whatever risk.
Tons of risk, yeah.
So he's like, 4.2%. That's it? I'm like, yeah, well, that's the risk-free rate. So what sort of risk are you looking to take? He goes, what about Tesla? And you laugh, but that's the sort of market that we're in.
That's what I'm saying. So some people would be thrilled with 4%. Risk-free. Some people would be thrilled with that. Some people have very unrealistic expectations because I remember telling this quick story. I told there was a young kid on my educational service. I was saying that the market does 8 to 10% a year. The best, say 10%, the best in the business do 20. The best in the business consistently do 20. The absolute elite will do a little bit more than that. I'm talking about over a 10, 20, 30-year period. And he's like, the best in the business do 20 a year? He's like, I want to do 20 to 30 a month. That was his mentality.
Yeah.
And I'm like, not shaking my head, but and he was like, no, like, you're wrong. He's like, that's not what I'm looking like. He's like, that sucks. Like, I want to do 20 or 30 a month. So people's expectations are very unrealistic, whether you're a trader or investor. And if you tell someone 4%, like I don't know if they know that's good, because they also hear about other people doing better and they hear about other stocks going up.
It's so easy to be distracted. I mean, ultimately, what's the point of this? Right? What's the point? What is the money for? And a lot of people have to figure that out and define that. And I think when people get started or before they really get to the, oh yeah, wait, all of this risk has a purpose. I am putting myself through potential pain, anxiety, maybe sleepless nights for a purpose. And the purpose is because eventually I want to take less risk and make sure that I can live the life that I want to live and maybe give some money to my kids or charity for that fortune. Like, there has to be a purpose behind it. And some people figure that out eventually and others don't. But everyone, I hate having casual conversations with people about stocks.
Yeah, it's too tough.
Right? Like, there's no upside. And when I tell people, I tried to convince this handyman, I'm like, listen, you gotta, because he's like, give me something, right? I'm like, well, fine. If what do you look? Let's just say I give you, I'm like, all right, buy Ethereum, and that works. And you turn your 50,000 into 65, and what are you going to come back to me with another? Like, to what end? You know what I mean? Like, what are you actually trying to do?
You taught me this actually a long time ago. It's a lose-lose talking about individual stocks, because if you give it to somebody, I don't know, stock's at 50 and then it goes to 60 or 70. Maybe they've never seen a gain before, or that they're in a euphoric state. They're going to ask you what to do with it. Well, what should I do? Because no one can make a decision. Right. No one can make a decision on anything. The majority of people. So if it goes from 50 to 70, now, oh my God, I'm making money. What should I do? What should I add more? Should I sell it? Should I do? No one knows. And there is no right or wrong answer.
And people don't believe you, in my experience, when you tell them that you can't see the future. Which is
they think you know.
Which is really what is like, bro, if I knew, I would tell you.
Or if the stock goes from 50, I might stop myself out. Let's just say a 10% stop. I'm out at 45 or whatever.
And at 20, they're like,
and
motherfucker.
It's sitting at 20 or 30, you're an asshole. You never told, because that's where it's a lose-lose. Because I always use the blackjack analogy. If you play blackjack for a shoe and you win $100, right? And you leave, that's a finite thing, right? If you stay, you don't know if you would have made $200 or lost the whole 100. You don't know because you cashed out and you left. The market doesn't have the end of the shoe ever. So if you sell a stock at 50 and you sell it at 60, guess what? You always find out what happens afterwards. You always find out. So you know what the whole point is? Just accept you're never going to get the highs or the lows and learn to make those decisions. The problem is people don't want to make decisions, don't know how to make decisions, hesitate to make decisions. So they ask people like you and I thinking we know the answers.
Joe, you're right. People want to be told, yeah, I know you don't really know, but just tell me what you think.
Yeah.
So yeah, giving stock tips is a horrible idea. And you know what the good news is about the market? Like, not everyone, because some people just are doing this or chasing their tail forever and they never learn. I think a lot of people eventually figure it out, give them enough time. They take too much risk, or they realize, oh wait, yeah, this is actually harder than I think. But you can't tell somebody. You can't.
You almost have to learn on your own.
I can't tell somebody, hey, listen, here's the data. 70%, and this comes from JP Morgan, 70% of all stocks in the Russell 3000 experience, 40%. 40% of all stocks experience a 70% decline from which they never recover. Okay, what does that mean to you? Well, I'll just avoid those stocks. Like,
don't be in them.
Yeah, all of 98% of the gain of the index is driven by 2% of stocks. Yeah, I'll find those 2%. But the other thing, Joe, is that the Celgenes of the world really do change people's lives, right? Like, there are actually people, like my mother, who did buy NVIDIA and did get life-changing money. And that's also the fucked up part of it, is that, like, let's not act like there aren't people that do win the lottery. Now, it doesn't mean that, the answer to winning the lottery is to just buy more lottery tickets, right? For most people, it doesn't work out.
Yeah.
But you can't tell somebody it's not going to work out.
I love picking individual stocks, and I agree. Even I told Howard Lindsay, it could make your year. And he goes, make your year. It could change your life.
Yeah.
And I agree with that. But picking a monster winner is nearly impossible.
So I can't stick with a monster winner. I still own individual stocks in my IRA because I love to do it. And the truth is, if it wasn't for my show, I probably wouldn't be doing it. Right? It's content, and I do genuinely. It keeps me engaged. I really
gives you stories about your trades.
I love doing it, but I know my personality. I will never have a 10-bagger because I can't ride a 10-bagger because I know too much, Joe. I know that most stocks aren't 10-baggers. So I bought Netflix. I bought not Netflix. I did have a great trade on with Netflix, not at the exact bottom, but I bought Facebook at the exact bottom. Remember the day Jim Cramer cried on TV?
Yeah.
That was the bottom.
Okay.
I bought the stock. It was in a 77% drawdown. It's the only stock of my entire life that I bought the bottom, nailed the bottom. And I sold it for just over a double. And it's up 3x since I sold it. That's fine. I'm not mad. There's no way I would have held on. Same thing with Netflix. I had a 90% gain. I'm out. I know myself, and I know myself as an investor. That's the most important thing. Figure out who the fuck you are.
Yeah.
Like, figure out your risk tolerance, not somebody else's. Can you watch a stock that you own go from 80 to 30? I can't. I don't take big losses.
Carl Icahn, speaking of Netflix, he took a monster position in Netflix and made $2 billion on it, but it was over, 3 or 4 years. Yeah. He took a huge position. At the time, it was, I don't know, like 3-4 billion market cap. And
shout out to his son, by the way.
Right. It was his son's idea. But the point is, he held it and made a fortune off of it. But he also, during those 2, 3, 4 years, I have to go back and look at the chart. It dropped 30 or 40% multiple times during that move.
I don't have that sort of stomach.
Most people don't. Yeah. And even the whole story, if you put 10,000 in Amazon, on the IPO, you would have had to sit through, the stats.
Well, you know why?
Several 90%
You know
drops,
why?
Not several, but a couple.
You need conviction to sit through that sort of a drawdown. And let's be honest, who among us that's investing is doing that sort of work to really have the conviction? Yeah, the stock's down 40%, the market's got it wrong.
But sometimes it's not the market's got it wrong. Sometimes the market's in a correction.
True.
And then when you're in a bear market, everything drops.
True. But that's true.
Even Apple, with two of the greatest products of our lifetime, with the iPhone and the iPad came out, the stock still dropped 70% during the financial crisis, not because of anything the company did. When the market's under liquidation, they sell everything. So
let's just say in a normal market, I don't have that sort of conviction about anything. I defer to the market. If the market tells me I'm wrong, I'm out. I don't take 40% losses on my stocks. That's not how I invest.
I don't either. But so longer term, this kind of leads into another topic I wanted to talk about: active versus passive. You guys mostly do passive,
not
for
true.
the most part, or not true?
Not true.
Tell me a little bit then. You do some tactical stuff.
Yeah. So I am a big believer that buy and hold investing beats about everything else. And when I say about everything else, I know there's exceptions out the ass. Okay. Obviously.
But buy and hold index.
Buy and hold index.
Yes.
It also is incredibly difficult and challenging and frightening and boring.
Because you're talking over every 10, 20, 30 year period, and most people's time frames are 7 seconds.
Exactly.
Yeah. So go ahead. Sorry.
So if you are able to buy and hold a few index funds and do nothing else, and go about your merry way and live your life and keep buying. Well, you're probably not listening to this podcast, let's be honest. But if you are able to do that, and millions of Americans do that because they don't know anything and they're not watching us, they're living their life.
Yeah.
So millions of Americans actually do invest that way. If you look at all the studies about Vanguard's 401k clients, they never fucking sell. Like really and truly. And they're beating everybody. People who come to us don't have that luxury. They're coming to us because they can't just buy and hold. And so we never wanted to be in the position of telling a client, don't worry, the market always comes back. What do you mean, don't worry? I'm worried. That's why I hired you. I'm worried. And I don't know that. I know that in the rearview mirror, I know that the market has always came back. I also know that in 2007 to the bottom of 2009, the market lost 57% of its value.
Yeah.
So don't tell me the market always comes back. I've got 43 cents on the dollar and I'm trying to retire. Are you insane? The market always comes back. That's not fair to say to somebody. And then there's been periods of 15 years of the market going nowhere and having some brutal drawdowns along the way. How's that sound? So we never wanted to say that to somebody. So we did create a tactical model that we run in-house. It's a trend following model. Doesn't have a million bells and whistles by design. But in the event that there ever is a really nasty, prolonged bear market that lasts for more than 2 weeks, I don't want to say to somebody, don't worry, the market always comes back. So we do that. In addition to, yes, we do hold index funds, we also have active strategies that we use to complement that. And when I say active, it's not discretionary stock picking or, concentrated equity or anything like that. It's systematic, quantitative stuff, whether it's shareholder yield based or momentum based. So we're not buy and hold index boglehead zealots. Like, I think that's a perfectly reasonable approach. But no, that's not what we do. And what we do, since you asked, is we start with the end in mind. Like, what is the purpose of this bucket of money? What are we trying to do here? What's it for? And then we work backwards and we say, okay, we try and do it in the most tax efficient manner. And we work backwards and say, okay, based on all of this conversations that we've had, we think this is the appropriate level of risk. We think this is the appropriate portfolio. And we think that this will be able to survive ups, downs, sideways. And that's hard. It's a balancing act.
Yeah.
It's really hard to get it right because there's going to be times in the rip-roaring bull market where you're like, why don't I own more stocks? And then there's times where the market's going down. You're like, why don't I own less stocks? And then there's times where this isn't working or that's not working or international's not working or value's not working or whatever the case may be. And it's a balancing act.
Yeah, we do have to wrap this up, but do you find yourself when things are down, you're more of a psychiatrist for your psychologist for your clients than an advisor?
Absolutely.
You're like talking them off the ledge and getting them to stick with the markets.
Yeah, so now it's never, don't worry. I'm worried. Right? I was on
because while that 30, 40, 50% drop is happening.
Stocks don't just fall 30% for no reason.
There's a lot going on.
So we empathize. During the pandemic, I was frightened too. But you hired us to get you to your destination, and we're going to get you there. And it's not going to always be comfortable, but we made a plan that included for storms. We knew that there was going to be storms along the way, and we're going to get you to your final destination. That's why you hired us.
I feel like we can go on for a long time, but it's happy hour and it's been over an hour.
I feel like we were just getting started.
I know, we were just getting started. Can we continue this again for part 2 in the future?
Absolutely.
Yeah, no, that'd be great. I know there's so much we can get into as far as active, passive. I had all these notes here and we didn't even get to any of them, so I'll save it for the next time. I appreciate you being here. Thanks for the kind words. Thanks for doing this and joining this, being one of the first ones on here.
Love talking with you, Joe. You're the best.
Thanks so much, and we'll see you next time.